Well, today I think it would be really useful, Paul, if we could talk about something specific across both the lifestyle and the capital focus portfolio, which is what you call a business improvement program. So it might be obvious, it might be Ron Seal does what it says on the tin, but for the case of those that maybe aren't clear, explain first and foremost what do you mean by business improvement program?
So what we're talking about here is basically most of our clients we expect by now have already got really good financial governance in place. So they're reporting on the right things, they've got the right controls in place to protect them against risk from a financial perspective, been working for them for a period of time. And now what we're looking to do is to extend that offering and to start to help our clients by getting closer to the business outside of the finances. Where are the opportunities for them to improve as a business? So I think it's something that a lot of business owners struggle to get the ongoing support from. So they might have, a meeting with a consultant, might do a strategy session or a workshop or something, but it's just stuck in a period of time. And what they're craving, we feel, is that accountability of somebody who can help to guide them along the way and come up with a business improvement plan that is suitable to them and their needs and where they're at in business.
You say there, Paul, outside of finance. So where do we start and where do we stop then if it's not our core capability?
First of all, like many things, it's about starting with where are they at right now. So what does the current performance of the business look like, which will involve looking at the finances and getting a realistic view and an honest view of how they're performing at the moment. And then to start to ask some questions and to probe into the business to see where are the opportunities to improve. So this is not a sticking plaster. It's not an overnight success. It's, really scratching under the surface and finding out what makes up that business, maybe helping the business owners to think about some things that maybe they've buried away in terms of what's happening in their business or things that, they're scared to confront. And it's about bringing those things up and identifying, based on our experience, obviously working with lots of other agencies, where we think and the client thinks in partnership the opportunities might be to start to improve. Some of it they might already be aware of, as I say, and then it's about holding them accountable, putting a plan in place. Other times it's about us servicing things that maybe they've not thought about before.
So you've said there that that's about us bringing our experience both of across our client base, but also in the wider sort of sector. So how much of this is agency specific and how much is, if I just said general business good practice?
A bit of both, I guess. It's usual headings that you would expect. We want performance for me has got to come down to profitability. What does the bottom line look like? Because I think although that's a lagging indicator, it's sort of the combination, I think, of everything else working well is, does it show up in the P&L? Does it show up in the bottom line profits? That exists for any business. The efficiency side in a agency, like any service business, is obviously usually about how well you use your team and how efficient your team are at delivering the work. So that is something that's relevant to any service business, not just agencies. But that's about really getting under the utilisation of the team, the recoverability, the charge out rates, all of that good stuff that, as I say, a lot of times is done on a fag packet and it's done as a one-time event. But it's about how do you actually use that information in your business and use it in a succinct way as well, not like death by data, but how do you work out how to actually track what's going on. And sometimes it'll be about uncovering high performing areas of the business and low performing areas of the business. So the limitation with your P&L is that it might hide both of those things, underperforming and overperforming, because you're only seeing the combination of all of that. So what we're really looking to do is to unpick where those profit drivers and drainers are, whether it's departments, revenue streams, types of services, whatever that might be. Inevitably, there will be in clients as well, team members. There'll be clients that there'll be areas that are overperforming, areas that are underperforming. So it's then starting a discussion with what do we do about the problem areas, and how do we scale, if that's the desire, the well-performing areas.
So when you're saying there that it's outside of finance, it's outside of the traditional role of finance. So it's not accounting per se. It's not creating a set of accounts and it's not analysing a set of accounts, but it is all the levers and the measurements and the metrics and sometimes even the KPIs we provide for clients going into what's the insight we can get from the data behind the numbers.
Yeah, it's extending that data. So the month-end P&L, the month-end process will help you to get very clear on the overall financial performance of that business. But this is about the layers underneath it that make up those numbers, and trying to get to the root causes, the predictive indicators, if you like, the leading indicators of the things that are going to affect the P&L later down the line, going right back and peeling those layers back to see what those drivers are. And like you say, for a lot of businesses, it's the same categories, but then there are nuances within each business, and there are areas to prioritize in one business that be different to the priorities of another.
So the nuances of each business and the fact that each business is different. And I know you've said on here previously that you think it's criminal to sort of associate companies to be the same and metrics, but I'm assuming there is some form of best practice. There is some form of benchmarks that we can show, whether that's, you mentioned their recovery. So either the percentage of time recovered or even the percentage of your salary costs maybe as a percentage of turnover. So there's some standard benchmarks we can use, but so I'm assuming it's a mixture of this is what good looks like in this space, but how does that resonate with you and your ambition?
Yeah, because I think for a lot of clients, they don't necessarily know whether, their utilization rate, their staff cost rate, recoverability rate, price, rate card, they don't know how that compares. So they'll have a perception of whether it's good or not because of how it compares to what they charged in the price, or how they performed in the past, or how they performed in the past. But often they seek our insights in terms of just validating that. I think my key passion with benchmarks is to not use it as a limiter. Use it as a nice to know, but don't use it as a limiter to say, as you often say, who wants to be average? So that's the industry average. We don't want to be average. We want to be better than average. But if we're way below the average, then you're probably going to start to pay some interest to it.
Exactly. Yeah. Really, really interesting. And you're saying there about sort of some of the metrics that we know and we can see across. But I suppose it's also sometimes just even introducing that discipline. So you've said there two things that I'd like to maybe go back on. What you mentioned about rates. So there is the recovery rate, the percentage of your time and your people, if that's what your main business is. The majority of agencies are people based and selling people for time. We can come back to that in a moment. And also the price, the rate at which you charge. So your rate card, for want of a better explanation. So there's two of those things that need looking at. What I think that we've come out of a period where there's been some fear about pricing, and I still believe that people are holding on to some very old rate cards and some very old pricing, and appear to be everything around us, whether it's our utilities, our power, lots of things, even our own people are costing us more money than they did 2 or 3 years ago. But there seems to be a reticence to increase prices. What's your sort of view on that, and what would your advice be to somebody who's looking at that? Because that's a quick improvement if you can achieve it.
That's the danger, is that more and more of our clients are becoming price sensitive and trying to drive them down on price. But I always say the same thing, is you can always pay less, you just can't get as much. So if the client's budget has come down, then the scope has to come down. They can't have both. So you can either pay what you've always been paying or get what you've always had from a scope perspective, but you can't have both. Obviously, we know now that there's clients that are making use of the likes of AI to make some of their services much more affordable, but that doesn't mean they're making less money. It just means that the volume might need to be higher to achieve similar results, but they're making good margins still because they've been able to use AI as an opportunity rather than just a risk. So the client's saying, we know you can use AI to do this now, you want to do it cheaper. And we're saying, okay, we now need to use AI well so that we can deliver on the client's expectations, because we don't want to be left behind. Other agencies are going to find ways to deliver products and services quicker, faster and cheaper. So we need to find ways to do that. It can't just be as lazy as drop our prices and continue to pay our people the same or more. And that's why that phrase of if you're not growing, you're going backwards, you're not standing still, because your cost base is increasing over time. But crucially, as I say, this is about applying it to each individual business and doing the hard work, because too often we see businesses thinking that, this is our rate card and this is what we've always done, without actually, particularly the bigger they get and the more removed the people that put the rate cards are from the operations, is, well, how much is that actually being delivered against? That might be your headline rate card, but are you sure you've got all clients paying against that rate card now? So it's doing some of the digging that maybe these businesses don't get the time or maybe haven't got the skill set in house to do, and then maybe they're a bit close to the data as well. A typical one will be, oh, we really like this client, they're a good client. Well, let us just validate that, because if they're a good client, that might mean your team really like them, and if your team really like them, that probably means that they're bending over backwards for them because they like them, and therefore from a profitability perspective, that might not be the case. And if they're a legacy client and you're scared of losing them, they're probably on an old rate card and being overserviced, and then it becomes an even bigger problem. So it's just about bringing that data to the surface, really, and seeing whether it's a priority to do something about it, and then holding the clients to account. And that leads into many other things, the commercial contracts that you've got in place with these customers, the renewal terms, the method of pricing. Are we doing it on time materials, fixed price, or value pricing? And so it's starting to question as many things as the business will allow us to question, really.
You mentioned value pricing there. That's something that was going through my mind as you were speaking, which is, I do see this as a significant opportunity for people to look at value pricing, because even if, let's just use AI as this example, the way in which we can deliver projects, deliver services is changing. But ultimately, I think many people forget that people are still buying the outcome. They're buying the output. Whether it's an idea, whether it's a creative idea, whether it's a build of some kind, whatever it is, there's a value ascribed to that. And I think probably the concept of rates, whether that's daily rates, I was never a fan when we had developers about, what's a lightweight, what's a midweight, what's a senior developer. And obviously these days, all of that's mixed, but it's how much you're prepared to pay for what they get in the output. And I do think it's a big chance for agencies to, I'm not necessarily saying rip up, but look at the way they're pricing and see where value pricing can come in, because that's the risk, isn't it? That the obsession about the rate cards can drive the price down, but then there's still a value in that output. So I think that's one thing that is of interest to me. And of course, the other big, I suppose, unanswerable question that when you mention AI and these new way of delivering services is, how do you go about pricing those things? It's been easy to recognize, the market rate for a designer is X pounds per day. The market rate for a developer may be Y pounds a day. But how do you price the bot? How do you price the AI that's coming in and doing some of your work for you? I think it's an opportunity in value-based pricing, but I think it's a challenge of how we get that pricing right.
Yeah, and obviously productizing has been a key theme in agencies for many years, and like that move to a SaaS model, product model, software model, whatever you want to call it. And that's exactly how they price, isn't it? There's no software company in the world saying,
yeah,
if this client pays £99 a month, that means we deliver 2 hours worth of work. You don't. You look at other similar businesses and how people spend money, and you think about putting yourself in the shoes of the consumer. What's the most we can charge the people that are going to pay for this, without too many saying no and too many being put off by the price? And then the whole point of timesheets, recoverability, utilization, all the rest of it is the sense checking that and validating it for your business. And that's why I say, don't let the tail wag the dog. Don't use that as the benchmark, the day rates utilization. Use it as a sense check, your logic that you've done for what's the right price for the customer.
And I know, today's not the conversation, and on another day, I'm sure we'll talk about my favorite capacity planner. I love it. But that's also where this comes in, isn't it? The ability to use my phrase, play tunes. So whether that's in real life, and can you look at project A against project B, or can you scenario based? Can you look at something that says, okay, if we rerun that project again, and we changed the way we priced, what would it look like? Because obviously we can apply the logic of, here is your costs, your fixed costs the same, the people. What if you could take one person out of that project team? Or what if you added one person? What does it look like? So I suppose, well, you tell me, how much of a business improvement program is theoretical and looking at what could be done, and how much is measuring the changes as you try and make them?
Yeah, so the benefit of working with existing clients is we already have access to a lot of their data, and we already have relationships with the people across the business. And usually that's not just the owner of the business, it's the leadership team and people that play a part in the processes that we need to have interactions with. So we have the beauty of having the keys really to their business. So it doesn't need to be hypothetical. We can look at, as you've said, real data, real projects, real people. And the beauty of data is that it's factual, it's not based on people's opinions. You can still layer opinions on top of it and have conversations, of course you can, but then you can question, well, is what the data's saying aligning with what the people are saying? So it absolutely is real. And then it's about, once you've diagnosed and documented, the key areas for improvement, then starting to prioritize and put a plan together.
And how do we address that? So obviously, as you say, first of all, we are the outsourced finance professionals in the relationship with the client, and the client is paying us for a knowledge, whether that just be the accounting knowledge or the knowledge in this sector. But obviously, having access to their data, there would be certain flags, green flags and red flags that we could see, whether that was compared to what we know of similar businesses or whether we know other metrics. And how do we approach something if we see something that we think is an area for improvement, but with respect that owner or that management team, whoever's looking at it, doesn't look at that level of data past maybe their initial KPIs in their accounts pack? How do we raise that so it's not coming across as we know your business better than you?
Yeah, we'll never know the business better than them, will we? They're often business owners, probably too much, eat, sleep, and drink their business. So we're never claiming that we've got all the answers or even that we know all the problems and the priorities. So come back to that word partnering. It's about having the conversation and saying, here's some things that we've identified. And it's interesting to see how businesses respond. Do they feel, like you said, offended, or do they disagree? Or most of them are growth minded and open minded, and they want to understand it and to dig a little bit deeper. So it's about just having honest conversations. If they genuinely don't feel like that's a priority and we understand why they don't feel like it's a priority, then we move on and we talk about the next thing.
So, I mean, the business improvement program has a start and it has an end and it has some modules in it. But is this about saying to somebody, look, either we've recognized something and we think you might look at this, or is it bought on a come and have a look under the bonnet is a phrase I often use. Come and have a look under my bonnet and tell me what you can see. So, what's the sort of route to somebody either recognizing or wanting to subscribe to such a program?
Wanting to improve the performance of the business is how I would put it. I think we've obviously talked about an exit planning focus, and often an exit planning focus assumes that you have a high performing business that you are now ready to make attractive to a buyer in the future. The harsh reality is that most businesses are not high performing. It's difficult for us to apply this to a hugely underperforming business because there's probably so much to fix, and arguably they might have the complete wrong business model, or they're in the wrong sector. They're doing something that's outdated, whatever it might be. But if they're performing okay, but putting an awful lot of work into just doing okay. One client that we started working with, 15, 20-year-old business, grown really, really fast, but they were losing money. So the business owners felt like they were working harder than ever. They were managing more people than they'd ever done. They had more talented people around than they'd ever done, investing more in marketing, more in systems, process, etc. And they were performing worse than they've ever done from a bottom line perspective. And that scale, as you often see, had been a curse as much as it had been a blessing. And they couldn't achieve anywhere near the levels of profitability that they did when they were small and when they were lean.
Okay, that's really interesting, Paul. So what you're saying there is that we have an instance there where this happens to be a client, but it could be anybody that's either experienced growth, and I don't know in this instance whether that growth was an ambition at the outset, but then we can look at that business with them and say, actually, is this taking you where you want to get to? So how much of this is allowing them to reassess their North Star, their goal, whether it is still a capital focused business or a lifestyle business? Does this program allow them to sort of assess and maybe rethink and pivot or reposition their business?
If you're in the early days of running a business, it is very understandable that you'll be working really, really hard and trying to get it take off the ground and giving it every chance of taking off and being successful. If you've been running a business for 5, 10, 15, 20 years, it's my firm belief that you shouldn't be working as hard now as you were back then. And that's the problem I think that a lot of business owners get them into, is they've never got out of that cycle. And the bigger the business has got, the more stressful it's become. They're probably working similar number of hours. They can't work more hours because they're working too many all hours in the first place. But it's the mental drain of all the people that you're responsible for, your team, your clients, and everything that comes with running a business. So if it's not getting easier, and performance is stagnated or not getting significantly better, then usually they want to, zoom out and take some action before the business gets away from them. I often say that remember that your business is there to serve you, not the other way around. So if there's a disproportionate result between the effort that you're putting in to the outcomes you're getting for your business, then that's what this is. That's who this is aimed at.
And where do we sit on maybe helping them understand how structure could support that? So what you spoke about there is an example that I see a lot of, where the principal or the owner has been the key decision maker. The business has grown and grown. There are now probably far too many direct reports to that person, and they come into that never really delegated and never had the structure in place. And it sometimes seems counterproductive to explain to an owner that actually investing in some management may actually ultimately make them a more profitable business. So it's where I suppose you're spending your pounds. But where do we sit on that, Paul? Will we advise on structure? Will we say, hang on a minute, look, you're currently wearing too many hats, or you're spending a little bit of time doing all the jobs that you did when you started the business, and now you're trying to do the same with, let's just say, 30 people?
Yes, there's a really good indicator that can start that conversation, which is just looking at the percentage of the non-chargeable team versus the revenue, and the balance between chargeable and non-chargeable people. And sometimes they've really overinvested, consciously or unconsciously, which is the first question for them, into that management team, if you like, or that support team. So again, this is about the conversation and partnering between what the data is telling us and ask whether that's the question. I think that the support team of an agency should be costing something like 10% of the total revenue, and his chargeable team should be about 50%. So if that's 16, 17, 18%, I would first ask the business owner whether that comes as a surprise. And they might say, no, that was part of a strategic plan to invest in a management team ready for the next stage of growth. And then the question is, well, is that happening? Is that growth coming? Are we making progress? And we can see that number, that percentage coming down, and therefore it's just accepting where we are in the journey. Or actually, is it becoming a bigger and bigger percentage because trading hasn't taken off as much as we thought it would back then? And then the opposite to that is you're not investing enough, which I think comes back to your question, which is, well, if you're only investing 3 or 4% in a support team, then it's no surprise that you are very, very busy. If the data doesn't marry up, i.e. they're investing well, but they're still really, really busy, then you would say, okay, let's have a look at the organizational chart. So the people that you've put in leadership roles, what are the roles that they're fulfilling? Have you got a job description for those people, or was it just people got promoted in the business because you were scared of leaving them, or because they were the best technicians, crafts people in the business, and now they are in a management role that they're maybe not suitable for? To have a look at the organizational chart, the job description, your favorite capacity plan, and then the SOPs or the playbook, the operating procedures as well. Because the danger might be that you've got really good, talented people, but they're making up for a lack of process. And when those people leave, which you need to be prepared for, it sort of falls apart a little bit. And even when they're there, it's probably very inefficient and very expensive, because you've got all the people at the top doing all the work. Whereas my view on business is that you should be delegating it to the least experienced people, everything as much as possible, because not only is that a cost saving, it's also far more inspiring for younger, inexperienced people to learn as much as possible as well.
I think you've hit on a few really interesting things for me there, Paul, which is, let's just say, about operating processes, because very often lots of agencies are project based. And the downside of that is it can be the feast and famine in terms of the the revenue lines. And very often the principal is involved in sales, sometimes even in the sort of executive sponsorship, as I would call it. And therefore getting next quarter's project gets put to the back burner or whatever. But I do tend to see lots of people who think that, well, this is how we run a project, so we'll run 4 projects the same way, or 5 projects, and yet there's obviously a very different thing that if you're going to need, not only is it sometimes, as you said, the skill set and experience of the people, but it's simply just a process, and the process of managing multiple projects is essentially different to a project of managing 5, 6 standalone projects. And I think that's sometimes where people make an assumption that it's people. I think very often in this space, people got obsessed with the size of their agency, number of people we have, but it is understanding exactly that. Do the processes that got you where you were 5 years ago, do they need a complete revamp? And in my experience, and I might be biased being an ex-ops director, but it's very, very often there where you can make quite quick wins.
And sadly, what we see a lot with agencies is that they try to resolve it with software. So they'll say the agency management software is the problem. It's not giving us what we want. Whereas businesses ran a long time before software was launched and people used pieces of paper or spreadsheets and got along perfectly fine. So it's making sure that the process that you said is the key word for me. It's usually not the technology that's the problem. We get this. Clients coming to us or prospects coming to us saying we want to move to zero. And we'll say, but you've been on other software for 10 years, what's broken? Oh, well, we can't report this, and this. Are you sure? Because we love Xero and we'd love you to move to Xero because we know it really well. But usually the features are fairly common and they might be there somewhere in your software. You've just not worked out how to use them yet. So it's the same with agencies. Is I think sometimes they're too quick to jump from one platform to another. But the real issue or the real elephant in the room is maybe the people using the software or the processes that are laid out within that software. So it's, understanding the real root cause, which often is not the technology.
I also think what you said or you touched on there, Paul, is if we bring it back to our focus on this, which is potentially capital focused or lifestyle focused, very often that, the company, and let's just stick with the software for this example, buys a tool to do something because they think it's the delivery problem, and it may be a delivery problem, but bring it back to, but is this taking you towards your goal? I read an incredible article over the weekend, which basically was talking about the British Olympic rowing team, and they simply brought everything back to, will it make the boat go faster? And everything they did, including not turning up at the Olympic opening ceremony, by the way, because they said, well, this won't make our boat go any faster. It's bringing it back to that absolute focus on where do we want to get to. That was a 4-year program to get them from worst to winning a medal. But it is that point about bringing everything back, isn't it? And I think sometimes the business can drown in operational process if you're not careful. And particularly, as you say, tech comes along and completely changes it. But it's also just bringing it back to say, is that problem appropriate? Is it because we're changing direction, or is it because we're doing something different now? And I think that's where lots of time, and in many cases, lots of money's wasted trying to fix a problem that could have just been looked at differently in the first place.
But yeah, will it make the boat go faster is a fantastic question to keep asking, because sometimes the reason that they're changing something is because their mates using this software or told them it's good, or they were at an event and it looked good because they won't admit that this is what the reason, but the colours were great, the user experience was great. Some of the features I've never seen before, and it was impressive. But will it make the boat go faster? Like, what's the problem that we're trying to resolve? And we know that change is really hard as well. So unless there's a real compelling reason to change, and that compelling reason should only be that it makes the boat go faster, then why are you doing it? You might have been drawn in by the wrong thing, sadly, or your team have.
I also think there's a huge risk these days, Paul, about, and you said, I am old enough to remember when we got by with bits of paper and no mobile phones and no Google and everything else. But the whole point of, and I've seen lots of people do this, there's a trend with technology, or you go to an event, this thing looks amazing. There's lots of agencies investing in this tool. And then the risk is you as the user of that software have to change your processes. You're saying there potentially maybe with Xero that lots of the features are the same, but it's possible that someone says, okay, I now need to do let's just use bookkeeper for an example, slightly differently. So it comes back to, are you changing your process to make the boat go faster, or are you changing your process because you bought this software? And I think that's the bit sometimes where the assumption is technology will make it easier, when actually technology may take you backwards a step in terms of your operating processes. And I do think people really need to look at their processes. And we spoke about the strategic orbit recently, and I always say the operating processes and the customer experience are absolutely interlinked, because again, lots and lots of people will change the technology of solution and find out that, hey, hang on a minute, this suddenly, not only does it not make the boat go faster, but suddenly everyone thinks our boat's a different
It's
colour.
a really fascinating topic. I think like when things are not being followed well in a system, it's just taking a step back and thinking about why that is. Because often, as I say, they'll blame the system or blame the people. And sometimes it's just that you've not put the work into like implementing that thing properly between the processes and all the people. So, I put all this work in and people are not following the process. It's okay. Well, change is hard. It doesn't happen straight away. So unless you've kept that as the main theme in the business and there's regular meetings and regular cadence going on to make sure that people are following the process, it's no surprise that it's failed, because you have to be over egging it for a period of time, I think, to really stress test it. And then hopefully at some point, which I would say MAP has been reasonably successful at this, is that people are actually improving and developing the process. Not only is it being followed, but they're improving it for you. And you start to trust in your team that rather than micromanaging them, you actually just spend most of your time just saying, yes, sounds great. Yeah, this has been well thought through. Go ahead and make that improvement. But to try and get everybody understanding that the processes run the business and the people run the processes and improve the processes, if you can get to that point, I think that's when businesses really start to take off.
Again, fascinating, Paul. Outside of this space, I was MD of a business that when I came in, and you know what I'm like, it's 120 questions seeking to understand something. And every time I challenged a process to understand it, the answer was, well, we've just always done it that way. And it used to drive me insane because the business was going through a huge change. That was a print publishing business going online. But you can imagine the changes, and yet so many people would say, well, I've been here 20 years, that's how I've always done it. Let's go back to the concept of the program. And we've sort of spoken about where we start, maybe not where we stop. So answer this question. What is a business improvement program? Is it something that says we'll come along and point some things out to you and show you? Is it something that says you're signing up for a 12-month partnership, a mentoring program? How long does a business improvement program take? I know every business is different, but in principle,
I
give
think it
ideas
needs
for
to be at
people.
least 12 months, because I think earlier than that, you're just not giving it a chance to really stick. I have a lot of respect for the fact that most businesses, as I said before, they eat, sleep, and drink their business. If there's something that's not fixed yet in the business, it's probably quite hard to fix. It's probably not like an overnight thing, because they would have fixed it by now if it was. So if they're coming onto this program, they've probably got some frustrations that have existed for months, years, even decades, that even if on the face of it might look like simple to explain, they're not necessarily simple to execute, because they involve people, and people are complex. And as you said before, they're used to doing things in a certain way. This is the way that we've always done things. So you have to over-egg them for a bit. So by the time you've worked out what the problems are and properly diagnosed it, and then start to put a plan in place and then start to execute it and go through that teething period where it's really difficult, I think you need to do it for at least 12 months for you to be able to get value from it.
I also think, and I would argue as a minimum, I would say if you're serious about it, it's probably longer than that. We were talking with Ben Potter about something like the proposition, and we said that can be a 2-year program, and we discussed openly the proposition change, the pivot that I went through with my second agency. It was a similar timeline, because I also think the pressure on the business owner is, if we've identified, whether they've come to us and said, I think I've got a problem in this, and let's just use percentage of time billed for this discussion. So I think I could get a better solution, and we look at it, and does the data show us that, and we put some ideas forward. It's not fairy dust, and it just doesn't work overnight. So it's got to be bedded in. But also, we have to have that relationship that says, but let's look at it. And if we need to change, and we say, well, actually, yeah, agency A did it this way, but you're not agency A, we need to do it this way. We also need to be able to test, refine, and if necessary, classically, what do we keep on doing? What do we stop doing?
One of your questions about where does it stop as well. And what I would say to that is, we're not claiming to have all the answers and be the right people to help you with every area of your business. You know, there might be some clear areas that need a professional in that sector. So whether you need someone in to help from an HR perspective, or as you said before, from a developing your value proposition from someone who does that for a living. So we will suggest speaking to experts in different areas. So it's not all just about mapping the work that we do. It's about giving recommendations for best of breed in the different areas. All that matters to us is we get clear about what success would look like for them. So if the client wants to improve their business, we want to help to understand what that means, what the outcome would be, and we want to help them to get there. We don't have any drive for how they go about it. We don't have a blueprint for this is what you need to do and these are the people that you need to work with. So if there's an area that we uncover that we think they could do with some professional support, we would recommend they get that professional support. Often we would have somebody that we can refer them to as an option. But if the client has their own preferred contacts in that area, great. But let's help them to write a proper brief for those providers so that everybody's really clear what they want to get out of that request. If there's a business owner listening to this and thinking, my business is performing really well and I'm happy with the amount of time and the role that I'm playing in it, then this program's not for them. If you are sat there thinking, I'm working too hard or I'm not making enough of a profit or an outcome from this business, then we'd love to talk, because they're the people that would love to say, okay, what would better look like? What would a realistic, not ideal, what would a realistic scenario look like for you running this business and being in a better place where you're enjoying it, you're enjoying time in the business and out of the business, and you're getting the returns that you want from it? What would that look like? So as long as that is something that appeals to them, the rest of it is absolutely flexible. You know, we bring experience to the table, we can bring partners to the table, we can bring different people to the table, even different agencies for them to speak to, but they have to have that desire to improve in the first place, and then we'll work with them.
And the curveball there, Paul, for me is, or maybe not run the business. You know, that's an option. I think I see too many small business owners, not just in the space we represent, but across the whole sort of SME sector, that there's a lot of talk about increased M&A activity in last year. Some of it was natural because obviously the pandemic period slowed everything down. But I'm seeing too many people who are maybe not getting the outcomes that they want and are saying it's about time I sold this business, and maybe are rushing to an exit when actually, if we could sit, I sat with one recently that said, okay, so if I can show you how you can get the structure in place and I can show you how you can get the financial outcome that you're seeking, and that doesn't involve you selling your business, would you be prepared to have a look at that? And that actually is the route they're going down. So it is something as well, isn't it, that we can sit and help people decide. And some people will say, I'm definitely capital focused. Some people say I'm definitely lifestyle focused. But it's about being clear on that as you go along, but also maybe not rushing to. There's lots of pressure on people through M&A partners who get, earn money out of selling the business for you. Some are great, some are not so great. But the pressure sometimes is, the only solution is sell and get out. And whether it's my phrase, exit isn't binary, we know there's lots of other ways of, to use your phrase, extracting value from your business.
More people are coming around to that now. I think more business owners post-COVID are thinking more, reflecting more about lifestyle and about what good looks like for them. I think there's more options now. I know employee ownership is not a new thing, but that's becoming more popular and more attractive because of the tax reliefs and all the rest of it. And so I think a lot of the businesses the size and nature that we look after, they are open to getting that input into what their options actually are, rather than rushing in and saying, help me sell my business. So it's putting everything on the table, really. As I said before, just go back to what does good look like for them. If they're selling their business because they genuinely can't stand their business anymore and they want to be a million miles from it, then great. Not great, but that's very clear then that that's the focus. But if they're doing it just because they want to create a capital event, then there's lots of other ways of achieving that, as we've talked about before.
I think also, Paul, sometimes it's just the genuine not sure. I think there's a lot of people who are questioning. You did a piece a while ago, should I stay or should I go? And it wasn't the Clash, but that piece of, I've either lost my, let's just use the phrase mojo, I've lost my enjoyment, I'm not getting the fulfillment, it's harder than it used to be. We hear so many people saying that and believing that the only way to get better is to get bigger, when actually there's lots of other ways of looking at it. But I think there's a lot of people right now who maybe just need that support and guidance just to reaffirm, do you know what, use a phrase which is very often, well, just ask yourself again why you started this business in the first place.
The good thing about taking your time through a program like this is that you might change your mind 3 or 4 times throughout it in terms of how you actually feel, because you might be having a bad spell, a bad period, and therefore it's making sure that you're not reacting because you had a bad quarter or a bad year or a bad post-COVID era or whatever it might be. So it's taking your time to work your way through it. Like in an ideal world, we get to the point where the business is performing really well and they thought they wanted to sell it, and now maybe they're considering whether they do or not. But you want a great performing business, either for yourself to have a great lifestyle or to sell to someone else. So all we're looking to do really is make sure that they're in a position to be able to make that considered decision, really.
So you've mentioned there, Paul, something which is very common, which is the owner changes their mind. So they get into a position, maybe their circumstances change, hopefully it is somebody who may be looking to sell in a rush, a fire sale, then saying, hang on a minute, you're showing me that I can still achieve certain things here and certain, let's just use life improvement as well as business improvement. I can change my life doing this and not necessarily have to exit my business. So if they change their mind or it changes a pivot, or they say, do you know what, I did start on the capital, but now I want to go into lifestyle, how flexible is the program for that? And also, is it a question of, you will only see improvements after the initial year?
A really good question, and it reminds me of a client conversation that I had actually a couple of years ago, where they met up for a conversation about this sort of thing. And he was a very humble business owner and very modest, where he thought, making 35% profit margin and probably working 20, 30 hours a week, he still was seeking improvement. And it's probably just because he had become too relaxed and maybe thought, am I getting away with it? How can it be this easy? And he just used something like this really to validate the fact that actually maybe I've just done really well. And I've got to the point where things are in such good shape that it hardly doesn't recognize anymore how he got there or why he's got so much free time. So he's thinking, what levers can I pull? Where can I improve this business? Yeah, exactly.
Yeah,
and then you show them, well, this could be what you're missing. This could be what you could do. Here's some ways that you could, on paper, improve as a business. But they might look at it and think, yeah, that all makes sense, but it's not what I want. Thank you. And there's still value in that, I think, just having that peace of mind that you're not missing anything that you are unhappy to be missing out on, if that makes sense.
Yeah. I think it makes a lot of sense, Paul. I think it's a really valuable takeaway, which is we all know that every industry is full of success stories and every industry is full of the headlines, when actually sometimes it's just enough to say, but if this is what you want, one of the reasons we don't like the sort of, the sector benchmarks per se is, but it's what you want for your business, not what your friend wants or not what your neighbour wants. It's what's right for you. And I think sometimes it is a way of just being able to assess and give yourself peace of mind to say, yes, that would be in my view then clearly a lifestyle focus, but it's allowing you to go, do you know what, this is good enough, because we can sit there and say, and sometimes I think we can be guilty of obsessing on, small margins. Let's go back to making the boat faster, a small margin, but there's a cost to pay, isn't there? There's time, there's energy from the business owner. They might say, well, do you know what, that's just enough, that percentage margin for what I want in my life. And hopefully they've got their personal plan that, yes, we can help with another part of the program, to be able to say, well, actually, that is enough. Yes, the 5 agencies down the road from me might all be making a little bit more or doing a bit bigger, but for me, this is perfect. So it's about that, isn't it? It's about assessing your own, this is not a one size fits all. It's what's the outcome you want, and then a tailored program.
And I guess that's the danger of using the word faster. Like, what we really mean is, will it make the boat go in the direction that you want it to go in? Saying faster might make it sound like, will it make the business grow faster? There are lots of decisions that I make or choose not to make, because although on paper it improves the business, I would see it as a backward step for my lifestyle. So it's just about tabling those things really, and respecting everybody as an individual and taking the time through the process, so that you don't just catch them in a certain mood. You are partnering on revealing real data, industry experience, what's going on in their world, and taking the time to prioritize and work on the right things. And then a big part of it as well is working with their team. It's not all about the business owner. You know, ideally, if you're doing things right, you will be coming up with work streams on the back of a program like this that you then bring in different members of your team to run with, because then they become more bought in.
I think this comes back to the pressure lots of business owners put themselves, Paul. I've spoke before that when I was a young MD, I felt that I've got my I've got my name above the door. I'll say that in a second. We'll go back to that. So I think this comes back, Paul, to that pressure. And I've spoke about this before, is when I was a young MD, I thought that it was my job to make those decisions. And I believed that, it was my responsibility. And I wasn't mature enough at the time to realize that actually it must have been a little bit more about teamwork or delegation, whatever word you want to say. So I think sometimes as well, from what I can see, is that, when I've changed that later on in my career, the best improvements, without being rude, have often come from others. It's definitely come from involving the team, particularly in this space. The people who are at the coalface, the people delivering the projects, probably know more about where improvement can come than the owner. But sometimes the owner either assumes the responsibility or feels the responsibility that they have to create and deliver the program, where I'm sure we've got examples of where actually sometimes just get out the way is very often the best business
Absolutely.
improvement program for that
Better.
business.
Business owners have no responsibility to come up with good ideas or be innovative. Like it's whoever's the right person in each respective area. And there's nothing worse, as we know, for a team member than being told what you have to do, whether you agree with it or disagree. You want to inspire them, and you want to make sure that they've been heard and that their ideas have come to the table as well, which, as you say, are often better grounded in the front line anyway.
Interesting. So to close then, what we're saying is that whilst we call it a business improvement program and we know where we start, this is not a fixed event, because it will depend, first of all, on the uniqueness of your business. It will depend on, to use our phraseology at the moment, whether you are starting or considering capital or lifestyle, and that can change as we go through the process. We are honest enough to say we don't have all the answers, and we do have some great partners which we can introduce to people, or they can have their own. So there's flexibility in that program. So whilst we can dictate a start, we can never dictate the sort of end goal, is the finish point. But if somebody was interested in saying, I'm interested in understanding more about that, or I'm even interested in listening to some examples of how you've achieved improvement in a business similar to mine, how do we go about doing that?
There are some case studies in the book that I wrote. So financial confidence for digital agencies. There's some stories in there of clients that we've helped and been fortunate to be part of their journey. There it is. So have a flick through that, because it won't take long, and it'll probably help to explain it better than I've attempted to today. But as always, we very much treasure our clients. They've all got direct line into me. Pick up the phone, drop me an email, and let's have an honest conversation, because we don't need them to go on this program. We just want to know that the support's there if they want it.
Yeah. And maybe the first part, Paul, is that initial conversation to understand why. And then, I know that we'll be honest to say, this probably isn't for you, or it might not be worth the time, the cost, etc. So it's not something that we will be forcing on people, but it's, just even understanding, is this something that could be useful for me, is definitely worth that conversation with Paul. So brilliant. Well, listen, thanks again today. I think that's really useful. And hopefully we shall hear from some. No, that's a shit ending.
On the outtakes.
That again. Yeah, I'll leave that. Well, I think that's a clear place to stop, Paul. So what we're saying is, it's like everything. It starts a conversation. Either reach out to your normal map contact, or reach out to Paul. We can have an initial conversation to see whether this is something that you believe can benefit you as the business, or we believe we can support you with, and take it from there. So hopefully that's been some use, and we'll see everybody again soon. Thanks. Bye for now.